Hello, welcome to BlockFi Live. I'm David Olsson, Global Head of Institutional Distribution at BlockFi. And I'm joined here today to talk about blockchain adoption and crypto adoption in Europe and how that's evolving, as well as corporate and institutional trends in the marketplace. We've got a really exciting group of guests. I'm thrilled to have you all with me here. I guess we'll just go around and do some introductions. Christophe, do you want to start?
Sure, yeah, thanks, David. It's great to be here, and hello, everybody. So I'm Christophe de Celle. I'm the Director for Institutional Business at Binance in Europe. My background is in traditional finance, so investment banking and hedge funds, and I joined Binance just recently, about 7 months ago now.
Great, thanks. And then Tim?
Hi, Tim McCourt, Global Head of Equity Index and Alternative Investment Products at the CME Group, where at CME Group, myself and my team look after the global equity index benchmarks, as well as the alternative products, which at CME include cryptocurrency. And prior to joining CME almost 8 years ago, my background is in sell-side equity index swap trading is my background prior to the exchange.
Great, thanks. Eva?
Yeah, hi, I'm Eva Lawrence. I'm COO of Arcane Crypto. My background is also traditional finance. I was at Morgan Stanley for 8.5 years, most recently as an equity finance trader. And prior to that, I was working as a lawyer. And I moved into crypto a couple of years ago and started at Arcane last summer.
Wonderful. Thank you. And Yoann, you're wired up, ready to go. Tell us about yourself.
Yeah, so I'm the co-founder and head of business development at Wintermute. We started in 2017, so we're crypto native, but with a lot of blood from traditional HFT essentially. So we all come from Optiva, yeah, mostly focused on spot, looking at derivatives more this year, and yeah, we'll discuss that a bit further.
Yeah, absolutely. I think I wanted to do a segment on Europe just because of my own sort of background and journey. As I moved here in 2007 at a very heady time for Europe, which was followed by kind of like the pits of the financial crisis, and then came into crypto last year. And certainly it seems like the US and Europe have a bit of a lead in the space ahead of Europe. But I wanted to get some of the people that are thinking about trends in the market to talk about this and what's going on here. And is there more than meets the eye? And I think that that Europe may be behind. I don't know. We'll find out from the guests what they think. But there is a lot of exciting things going on, at least I believe. So, I mean, I guess I'm going to ask each of you just to chip in, and maybe, Eva or Yoann, if you want to start in terms of what are the exciting things, or what do you think is the growth trajectory of Europe versus the rest of the world?
Yeah, I'm happy to start. I think we've seen kind of a real tipping point the last year in terms of adoption in Europe. You could say that you had 2017, 2018 as the year of the retail investor, and now we're seeing 2020, 2021 being the years of the institutions getting involved. I think kind of coming from a Nordic focused background, as Arcane Crypto is located in Oslo, and we have companies within the group that are in Sweden. I definitely see real adoption among the Nordic communities, which are digitally led countries anyway. So I think from that perspective, from a Europe standpoint, we're seeing real interest and adoption there. And I think another area that the Europe takes the lead on is in terms of regulation. I think in the US, they're a little bit more worried about the overzealous regulators, especially in relation to token projects these days. Whereas in Europe, we've seen Polkadot in Switzerland, Bitpanda in Austria, and the ability for Europe to build some great crypto companies and great projects with a little bit more freedom than they've seen in the US.
Yeah, actually, that's a really good point in terms of regulation. We'll come to that, I guess, next. I know, Yoann, just wanted to get your thoughts on that.
Yeah, so taking a step back on the themes, for me, it's D for, you know, 1D for DeFi and 1D for derivatives, essentially, with the two, you know, the two trends actually strengthening from last year, essentially from, you know, post DeFi summer and the upticks in derivatives, especially options from, you know, late last year. In terms of geographies, we clearly see, I mean, there's historically a lot of foundations, you know, set up in, you know, the Crypto Valley and the US. And in terms of technical innovation, we see still really good technical talent in Europe. So I think that always saves us. In terms of funding, there's definitely been more funding in Asia and in the US though. But I've been happily surprised recently by noticing, you know, we're in central London for Wintermute, and we can, you know, we discover some interesting foundations at the end of the street. So there's very interesting setups, especially around DeFi and new ways of looking at custody, you know, picking up. So there's a lot of things happening in London as well. But yeah, still with the polls that, you know, Eva actually mentioned around, you know, the Swiss Valley and you know, Chinese polls around, you know, Hong Kong, Singapore being quite active, and the West actually fairly average, fairly balanced dynamic between the West and the East Coast. So yeah, that would be the gist of it.
If I can just add to that, actually, we're seeing some really dynamic hubs across Europe. So Yoann mentioned, you know, Zug in the Crypto Valley, London. I'm seeing a lot of the crypto funds here that are leveraging the existing hedge fund infrastructure, so that's served them very well. Historically, Amsterdam has been a very active trading hub, and a lot of those entities are now shifting to crypto. And I'm going to go a little bit more global here than just Europe, but we're starting to see a similar dynamic in the Middle East, where traditionally investors had more of, I'd say, hard asset focus, you know, focus on private equity and real estate, for example. And now we're having conversations with family offices and private investment offices that are very keen to get involved with crypto. And if you look at somewhere like Dubai, for example, they've really been driving things on the blockchain technology front.
Yeah, that's awesome to hear. And Tim, on your side, what do you guys think? I mean, obviously, I think you look after, you know, sort of the global business for the CME. How do you compare adoption in Europe versus the other regions that you look at?
It's a great question. And I think when we look at the adoption of the cryptocurrency futures that we have at CME Group, which, you know, up until last week was primarily Bitcoin. We recently launched Ether, so still a bit early to tell on the Ether side. But when we look at Bitcoin, one of the things we've always found surprising in a good way is the geographic representation of those that are participating in the Bitcoin futures market and the Bitcoin options market at CME is very balanced in terms of US versus non-US. And that's a bit of an anomaly at the CME, particularly in the other index products as well, where when you look at as a function of time of day or country of origin, about 50% of the Bitcoin futures flow is coming from outside of the US. And about half of that, or about 25% in total, is coming out of the Europe and Middle East region. So that's, again, significantly above some of the other products in the index suite. And I think that really speaks to the global interest, the global demand, and the fact that Europe and the Middle East, in my perspective, have a more outsized proportion of participation in Bitcoin. I think kind of reinforces some of the things that other people were saying, is that there's a tremendous amount of both traditional and non-traditional financial institutions that are in the region. And as that either is crypto native or more traditional firms making the leap into crypto, I think that trend will continue to grow because the infrastructure is there to start, as well as the interest and enthusiasm with respect to the being specifically interested in getting more involved in crypto.
Yeah, that's a great statistic. As you probably know, Tim, BlockFi is a liquidity provider on CME Bitcoin futures. So given that volume in Europe, maybe we want to deploy more resources here than we have at the moment. I want to move on to the next question. you know, I guess Christophe and Tim, just to follow on from that, you know, from the previous question, in terms of institutional adoption, you know, we saw a lot of the prop trading firms and crypto native funds really kicking things off a couple of years ago, or at least 3 years ago, or 4 years ago now, when Bitcoin went vertical. Institutions that are long-only asset managers or hedge funds or traditional hedge funds were more skeptical, didn't get involved as much. And especially, I would say, you know, in Europe, I think there was even more skepticism than abroad from my experience. What do you have things changed in the last few years in that respect? I don't know, Christophe, do you want to start?
Sure. Yes, I think they definitely changed, and I think you also highlighted how things, how fast things move in crypto. You know, we all have this saying where we say that 1 month in crypto is, you know, 1 year in the normal world. You're right. About 2-3 years ago, a lot of the institutions that were active in crypto were crypto native firms, be it crypto funds or market makers or prop teams. But now we're seeing traditional players, be it asset managers or hedge funds, that are either looking very seriously at crypto or have already launched their standalone crypto product. And in UK, for example, something very interesting that we saw last year is that some of the even more, I'd say, conservative UK wealth managers have now actively allocated in their portfolio allocation to Bitcoin, and you know, looking to capture some alpha there as well. So the trend is definitely, well, has happened or is progressively happening towards the more institutional players in Europe. And even if we look on and beyond the investment community, and if you look at corporates, you know, we saw Tesla and MicroStrategy grabbing all the headlines recently, but we're seeing that exact same trend in Europe, where CFOs are thinking of allocating either a portion or even all their treasury to Bitcoin to hedge against inflation and optimize treasury management there.
Very cool. I think that we'll touch on that theme a little later, which is a hot topic. And
yeah, I was going to add, you know, Dave, what's interesting too is when we look at how things have begun to develop in Europe, I would say, to kind of just echo some of the points that Christophe and Eva made, there's a few things that I think are also very unique to Europe versus other geographies, whether it be the US or Asia, where certainly over the last, you know, 3+ years in the derivative space, you know, offering a regulated product at CME, the questions have gone from kind of what is Bitcoin to how much of my portfolio should be allocated into Bitcoin. How should I be using this to create structured products? How should I be investing? How should I be hedging? What tactical trading strategy should I employ? So the questions are getting much more specific, which I think is a great trend. And then I think when you look at certain things, like the point around the various jurisdictions in Europe that are more ahead of the game with respect to ETFs, ETNs, structured products, investment vehicles. There is more, I think, opportunity there because it's just a different regulatory and kind of business landscape, where in the US we have a few investment vehicles. You know, you had some recent news out of Canada. You know, people are kind of watching and waiting if an ETF or an ETN will come to light in the US. But some of these products are already there in Europe, and they're using derivatives as a way to, or participants are looking at ways to use derivatives and futures to create these products, to hedge these products, to grow these products. So I think that's something that's unique. And I think that something that we've seen in the US, in Asia, and I think will become more important, particularly around Christophe's point, is when you also factor in the institutional landscape, things like family offices. You both have traditional institutions that are looking at this and jumping in for all the reasons that were said. But also when you look at family offices, they tend to be a little bit more nimble, right, in terms of some of the other institutions. If you think about the approval process, how quickly can they move into certain products? That's a trend that we've seen in multiple geographies, but I think certainly we're starting to see pick up in Europe and the Middle East, as well as more people are making that decision of, I want to be invested, I want to allocate into this. It also will be a function of how quickly they can move. And I think sometimes that's a differentiation between asset managers, hedge funds, proprietary trading shops, as well as family offices. The various personas of customers will also dictate the speed at which they move into it. But I think when you look at Europe as a whole, that diversity of participant mix, I think is something very encouraging for the continued pace of adoption to increase.
And just as a follow-on question for you, Tim, do you see that So futures have sort of been the gateway for a lot of investors to get involved in Bitcoin and now Ethereum. Do you worry at all about losing them then to to trading on a place like Binance, or that Christophe is here from, or other venues overseas?
It's a great question, and I think I would say there's kind of maybe two parts to that answer. The first is, I think one of the things that a lot of the institutions trading at CME are welcoming and using the CME is because it's a regulated venue. In the US, it's a designated contract market, or DCM, that's regulated by the CFTC, and that's a requirement for a lot of institutions. So that's something certainly we hear, and the fact that we're financially settled as a contract also is a bit of an easier on-ramp, because they don't have to address some of the issues around custody of the asset, insurance of the asset, or some of the other risks involved of holding digital assets that are new for them as an organization. So there is some simplicity and benefits of being a regulated venue. But when we look more broadly at the ecosystem, my view is when you look at the various exchanges overseas and platforms and the product types, they're all highly symbiotic, right? This is a growth versus growth story, and growth in one area is only going to be good for the other, in my opinion. Because what we've seen is, as some of the firms are onboarding to multiple platforms, both inside and outside of the US, they're deploying arbitrage strategies. They're looking at strategies that are extracting premium between futures and other types of derivatives and unit investment trusts, right, that exist. So you're getting some of these interrelated aspects of the ecosystem to come to fruition and really start to mature, which will only grow the velocity of the entire ecosystem, which we see as an enormous benefit to everyone. And I think as the more and more firms come online, get involved in more of the facets of the various price discovery pools and platforms that are out there, that'll be a net positive. So I don't necessarily think it's an either or decision long term for these institutions. I really think it's a growth versus growth story for everyone.
Okay, great. I'm going to turn it to Christophe to see if he has any also some insights on that sort of dichotomy.
Sure. No, I agree with Tim here. I think, it's a relatively young industry still. It's just, we have to take a step back and realize we're just at the beginning of things here. And one thing I find very refreshing in crypto is that we're all here to grow the pie together. I think the efforts that are put in from the exchange point of view, or different counterparts, be it admins, lawyers, custodians across the board, it's all very beneficial for crypto in the end. So yeah, I would agree with Tim's point of view there.
Okay, great. We're all on the same page. That's good. So I want to turn to the regulatory story, and what you alluded to earlier in the discussion, Eva, in terms of Europe may be a friendlier place than the US for some of these firms. Are there any clouds on the horizon? Is there the chance that the EU gets together and decides that they want to stifle the growth by over-regulating crypto? And also as well as in the UK, do you have any insights for us of what's going on in the halls of Parliament or in Brussels?
Yeah, I mean, I don't know if I'm privy to those kind of conversations, but in terms of the regulation side of things, I think the focus is going to be what happens with MiCA. That's where people are going to be focusing on what happens with the regulation of markets in crypto assets. Is it possible to create a clear legal framework from that? And is there going to be a convergence of your crypto markets and your traditional finance products in a way that actually works and takes into account the uniqueness of the crypto markets? Because I think a lot of institutions are looking for a framework that fits into their existing framework with their other financial products. But I think to balance that with the uniqueness of the crypto asset marketplace is difficult to achieve. I think that there's going to be focus on passporting. So MiCA has proposed an implementation of a licensing system for issuers and service providers that allows for passporting across member states. And I think that will be important in terms of the time and resources that the companies can put into this and can dedicate to getting the right authorization, the right licenses, the right regulation. If they can passport that, that's going to make things much more logical, much more straightforward. I think that there's also going to be focus on what happens this summer with the FCA in the UK in particular, with AMLD5. What is going to happen with this temporary list and the temporary regulation these companies have? Is the FCA going to be able to get through all of these applications by the summer as it's suggested, or are we going to have a rolling temporary list until they are able to get through it? And I think just in general, the focus is going to be, can we protect retail investors but not stifle the market and not restrict innovation? So in the UK, the FCA has banned crypto derivatives and ETNs. The reasons that they highlighted there was price volatility, difficulty trading, high risk of losses. And I think, after the events of recent weeks, people were saying, well, how is this different to GameStop? So I think that people are going to want to provide access, allow for innovation, and not stifle the smaller players in the market. And I think that's something that we haven't done in Europe yet, but obviously there is a risk that if you put these burdensome regulations in place, that it's more feasible for the existing large market participants to comply, and then the smaller institutions, they just don't have the money or the infrastructure to support it.
Yeah, and that's something that's on our minds at BlockFi as well, as we're looking to expand our footprint and establish a presence overseas, probably in the UK and in Asia. And I think that one of the issues that we face is that there's different regulations in every single European country. And so then we need to hire literally 20 outside counsels from each jurisdiction to figure out what we can and can't do. So I think in that case, regulation actually could be, and uniformity of regulation could be a good thing in terms of doing business. I'm going to turn it to Yoann and ask you a little bit about what you do. I know that Wintermute is your passion and your day job, but you also are a prolific angel investor as well. So this is an opportunity to give some of the names in your portfolio or talk them up, and I'll ask the same question to Eva as well. But there seems to be sort of new projects springing up every day. I mean, how do you distinguish in digital assets? How do you distinguish between them? What are you looking at the moment?
So not to confuse anyone. So the angel side I've always done outside cryptos actually. So it's always been like the B2B SaaS or the fintech. But we've managed actually with Yevgeny, my co-founder and CEO, we've managed to actually get through the board. We're not turning into a VC, but we are making strategic investments. So anywhere between 100 to 500K or so in about 20 crypto companies. It remains very strategic. So a lot in DeFi, as we've screamed on every roof for the last few years. On the picking or going through tons of projects, it is very, very challenging nowadays. So it's a very, very noisy environment. Just on the Polkadot ecosystem, there's about 300 projects looking at either sort of an oracle or a bridging type, so cross chains. There's a lot of positive things that we're seeing actually across many geographies. So it could be, I was mentioning earlier, noticing that good foundations were down the street in London, but there's also a lot of learnings and a lot of best practices, or the good practices from 2017 that have been kept, and the bad ones have been put away. We're seeing actually more and more hybrid equity and token rounds, with people understanding the value of each type of investors, who and more of a realignment between the foundation that might have a project that that needs to be built over 3 or 5 years or so, and then having this hybrid funding is quite useful. And then you still have a token for all the token economics and so on. So we see a lot of good things in DeFi, and I mean, we announced actually an investment in DYDX last year. We will probably announce more soon, but I'm not going to. Some of the rounds haven't closed, so we're not going to share that yet. But it will essentially just be around consolidating, and the two aspects, or the three aspects of what we really want to work on in 2021, 22 or so, is essentially helping the DeFi ecosystem to thrive, reinforcing the institutional development. So there's internal things that we're doing on the RFQ, and us building a streaming API that's helping there. But there's also a few things around custody, which need to happen for more institutions to come into the space.
Yeah, and in terms of, I mean, back to the regulation, obviously in the US, there's the Minution rule, which could sort of stamp out or definitely put a bit of a damper on DeFi as applied in the US. And does that concern you at all in terms of your investments overseas, or the AML, any of the AML KYC things that have been highlighted? So
we do all the AML KYC that we can. We have started for some OTC activity. We've actually, and actually for some clients, we stopped, or if we're not 100% sure, we just don't trade with US counterparties, or and there are solutions there. You can see some clients being wrapped with people who basically do the KYC and AML, and the client gets wrapped, and then it is used in DeFi. You see hybrid solutions that enable AML compliance essentially, and DeFi. So it's really difficult depending on the jurisdiction, because actually from Switzerland, for example, I've heard surprising tolerance around DeFi as opposed to what happens in the US. But yeah, I mean, the US, the aspect of peer-to-peer trading in the US is quite stringent. So yeah, no, definitely. Yeah, that's a one to be careful with. Yeah. I'm going to turn to Eva and ask you sort of the same question. What are you looking at, and is it how does it compare looking at various companies and projects in the blockchain space? How do you manage to sift through all of the things that are popping up?
Yeah, I mean, from Arcane's perspective, we're looking at companies within the financial and the payments segment of crypto. So complementary companies that are looking at financial products, looking at payment solutions, in particular for the payment solution side of things on Lightning. And we also have an investment in a company called LN Markets, which is looking at Lightning derivatives. So giving users the ability to trade derivatives straight from their wallet. So I think that a lot of the companies we look at, we're thinking how would they fit within the broader group of Arcane. And we're working on a buy and build strategy. So we're making investments and also acquiring companies outright. Another area that we've been focused on has been the institutional side of things. Obviously, we've seen the rise in institutions becoming involved in crypto, but the ones that we haven't yet seen has been the banks from a trading perspective. So we have an investment in a company called Pure Markets, which is building an interbank trading platform for tier one banks to trade crypto. So we'll enable price discovery, wholesale risk between the banks to trade spot crypto in a similar way to they do at the moment in FX market. So I think that this is a unique product because it's addressing the missing piece within the institutional arena at the moment, which is that the banks want to get involved and are receiving more pressure from their clients to get involved. But they're very particular in the way that they can do that. And that's going to be trading with another bank with the risks to the other bank in a structure similar to the form that they're already familiar with. So for Pure, the team is made up of FX industry veterans. They've got relationships with the banks. They already have that kind of confidence built, and that knowledge of the FX industry. And so I think the banks have seen comfort and found comfort in that. So there's 2 banks who've signed letters of intent with Pure, and then a number of others in the pipeline. So that's kind of one area in particular that I'm excited about.
Okay, fantastic. So that's really good news as well for the institutional space.
Definitely.
And so I'm gonna pivot back to that theme and ask Christophe a question in terms of what are you seeing from your clients in terms of the challenges for them for institutions to get into crypto, and how do you help them along that journey?
Sure. Yeah, I think you can look at that question from different points of view. If you're a traditional finance institution looking to enter the crypto space, it can be a little bit overwhelming at first. There's so much information. There's a whole at first educational journey to embark on to familiarize yourself with sort of the nuances in crypto, be it the different exchanges, the security aspect, custody, etc. So that's sort of the first step. Also, being a traditional counterpart or institution, your trade sizes are going to be bigger. So at Binance, we're working with a lot of these players to help them understand the best execution on the exchange, or maybe going down the OTC route through a portal or the desk to sort of source the best liquidity for their trades. Now, if you flip the viewpoint there, and if we're looking at it from a crypto native institutional perspective, some of the crypto funds that are looking to raise AUM, for example, they're speaking to traditional investors. And well, one, they have to pitch their investment strategy, explain what their investment edge is, but also, embark some of these investors on that educational journey I was mentioning earlier. But also they may come across investors who have requirements that they've inherited from the traditional space, and that doesn't necessarily match the reality of the crypto world. Yeah. Now, and the good news is, and both Yoann and Eva touched upon this, is that crypto firms are working very closely with finance firms, financial institutions from the traditional space to sort of bridge that gap. So we're moving closer to, I'd say, a better understanding of the space, be it through education, active engagement, or just through the sort of the technological developments that we're seeing.
Great. And Tim, I guess I'll turn the same question to you in terms of derivatives as an entry point for institutions. Tell me about sort of when someone comes to you and says, I want to trade Bitcoin for the first time, or Bitcoin futures for the first time. What does that conversation look like? How do you position your product? And I guess are we seeing? I'm gonna throw the question out in terms of corporate adoption. Do we think that it's that corporate adoption is going to keep the wave of momentum there is going to keep going?
Yeah, I mean, I think it's hard to exactly say what will happen with the long-term continued momentum of corporate adoption, but you certainly can't deny it's happening, right? With a lot of the public remarks being made and a lot of the interest that I think we've all expressed here today that we're hearing and seeing in the marketplace, it's certainly an upwelling of interest and demand, and I expect to continue for the future. How long or what kind of makes it further accelerate, tough to predict. But I think when we look at the CME Group offering, there are a few things that make it, as I was saying earlier, a bit easier for folks to get involved. And I would say the two things are, one is that it plugs and plays the same way all of their other futures at CME trade. So if you're already connected to CME, which a lot of institutions are, our Bitcoin and our Ether futures and our Bitcoin options, they function the same way an S&P 500 index future does in terms of kind of a widget through the machine when you think of it in that regard. Their clearing members are already connected, their brokers are already connected. So it's a bit easier as an access point, especially if you're just figuring out how to kind of plug into the more crypto native offerings that are out there. The second, though, is that it is important for our product to be closely related to the underlying spot market where these Bitcoin US dollar fiat transactions are occurring. So our futures are on regulated benchmarks. So in the case of Bitcoin, it's the Bitcoin reference rate, and for Ether, it's the Ether US dollar reference rate, where these reference rates are still tied to transactions that are happening on Bitstamp, itBit, Coinbase, Kraken, and Gemini. There's public criteria around the reference rate. We're always looking for new platforms and exchanges, spot exchanges, to be added if they meet the criteria. So it's a fairly robust infrastructure that we really want to try and marry the two. Is that how do you provide a futures contract that closely tracks the spot market and converges with the spot market at maturity, but offers the kind of flexibility of being simple and familiar for those folks who want to access, invest, or even hedge cryptocurrency, but necessarily don't have all the other connectivity that they need to trade on multiple other platforms out there. So I think those are the things that are easy. It's a regulated futures contract on a regulated benchmark, and it's a familiar offering. It just makes it easy for some of the traditional institutions to either imagine or build that strategy of how they will access the market, as well as get it approved internally, I would say, as well. It's just something that it's a bit easy for folks.
Yep, makes a lot of sense for some of the institutions that that we talk to. Absolutely. And just on corporate adoption, I don't know whether Yoann, Eva, Christophe, any thoughts there on whether we see it continue, or do you think that there's been an anomaly sort of amongst the tech, sort of very tech focused avant-garde in the US?
I mean, I think we'll definitely see it continue, and I think that it would kind of be irresponsible for most corporate treasurers to not at least consider Bitcoin, whether or not they decide to hold it on their balance sheet. I think if you look at the attendance of the MicroStrategy conference recently, part of that, Michael Saylor did a Bitcoin on the balance sheet seminar, and I think there were around 8,000 that attended that part of the conference. So I think it would be crazy to say that there aren't people considering it. I think they definitely are. So I hope as a result of that, we do see more companies announcing, this year and into the future.
Yeah, absolutely. Yoann or Christophe, any thoughts on that?
Yeah, I think it's a given, and I think it's just the start. I think we're seeing. I was hearing this morning from. So we tend to deal very much B2B, so we don't deal with any retail, but we tend to deal with large OTC desk or funds directly. And there's basically a tier one hedge fund apparently who was allergic to cryptos until now, but two of their LPs just basically started to stomp the floor and basically say you have to do some cryptos for the next few months, or we basically will take the money away. So I think there's more and more consciousness about the fact that if you have net positive assets, you should have some foot in the crypto space. Just with the sheer money printing that's been going on at central banks and so on, that's one of the main ways to hedge against that, or at least that's been one of the main ways for institutions to generally hedge against that. On top of the public markets and the equity markets and some commodities. Yeah. But yeah, I think it's not stopping at all. And even beyond that, as institutions, it's not only financial institutions, but it's also with Tesla accepting BTC for payments for a Tesla. Then now finally there's a fairly visible example of what do you do with your cryptos instead of just speculating with it.
Yeah, hodling or speculating. Yeah, I mean I agree. I think it's somewhat it's an FX allocation. If you're looking at a corporate treasury and you say, okay, I have liabilities in dollars and sterling and Swissies, and how do I hedge those? And then, well, okay, if at the end of the day, I have all these depreciating currencies. How do I hedge against that? How do I hedge against US dollar if everything's depreciating at the same time? So yeah, so I think that's for my mind, that's what it kind of comes down to. But Christophe, any thoughts from your side?
Yeah, no, I think we've pretty much covered it. I mean, I would just echo what's been said. I think we're at the beginning of this trend. It's true that it's been the sort of more tech type corporates that have been actively, allocating some treasury or all of the treasury to Bitcoin. But that's just the beginning. From our perspective, at Binance, we're already starting to see interest from non-tech firms who are inquiring about, how best to allocate to Bitcoin.
Great. Last question I'm going to ask. If you can name one thing that was the biggest surprise of 2020 for you, and what's your sort of biggest surprise prediction for 2021, or the thing that you're most excited about And I'll start on my screen, at least from right to left. So I'll start with you, Eva.
So I think in terms of what was kind of maybe the watershed moment or the great surprise of 2020, I think for me that was the rise of the payment sector. So the involvement of Square, PayPal, Revolut, and even Visa conceding that crypto backed by fiat had a place in emerging payments technology. And I think that also feeds into nicely where I see the real development, and the thing I'm most excited for 2021 is the evolution of the payment sector even further. MasterCard getting even more involved, Venmo looking to integrate in 2021, and then also on the Lightning Network, how we can use that to make smaller, cheaper micropayments. So I think that there's a lot to come for the payment sector, and as far as adoption goes, that is key to exposing crypto and integrating crypto into general consumer everyday life.
Makes a lot of sense. Yoann?
Yeah, for me it's obviously more trading related as such, even if we do see a lot of development in the payment space, but we always one step remote. It's difficult for me to say. There's two main moments essentially. There's obviously something that we had been looking at for 2 years around DeFi. There's basically been the DeFi summer where the locked assets grew to I think about 14 billion, and it's now around 50. But it's very much took off around the summer, and actually a month before that, I can't remember if it's June or July, but the Porter de Jones letter that sort of led to this whole domino of in December you could see like a new micro fund or a new pension fund or an insurance company just every day essentially just saying that, oh, we've actually allocating, or we've been allocating some of our funds to cryptos, even if when it's mass mutual and it's a tiny percentage, but it's already symbolically it's already quite good. So yeah, the only caveat to that is that now investment committees understand Bitcoin. Now they're just going to need to understand Ethereum and some many other things, but it's it's a big step. So yeah, looking forward to see that flourish in 2021.
Cool. Thank you, Yoann. Tim, are we going to see a Litecoin or Link or DOT futures contract in 2021, or what? Tell me surprise for 2020 and then predictions for 2021.
Yeah, it's I think one of the things, I don't know if it is necessarily a surprise for 2020, but I think something that we were really pleased to see was not only the kind of culmination, I think, of some of this around what others are saying in terms of corporations figuring out the payment thing, kind of jumping into the space, traditional institutions making allocations and becoming very public about embracing something that a few years ago did not quite enjoy that same kinship, so to speak, I think, with the traditional community. So I think that's something it's poured a lot of interest into the ecosystem, and we've seen that result in really strong volume and open interest growth at CME. So I think some things that we're proud of, and it's really towards the back half of this year, we really saw this adoption accelerate in terms of the number of large accounts, institutions that were trading at CME. And I think for CME to be a very traditional exchange, but having really cemented its status alongside other exchanges and venues out there as a very strong crypto offering, where it was a highly competitive space in the US, and not everyone has had the same success that we've had. That's something we're very proud of. And I think it's something that really speaks to us being committed to our offering and working with customers to deliver the risk management tools they need around crypto. So really just kind of pleased of that accomplishment in 2020. And as we go into 2021, I think it's really just an extension of that, where what I'm really excited about is with the launch of our Ether future, this is CME's third crypto product, but our second digital asset offering. So I think to kind of make that step for us outside of Bitcoin into Ether like this, as the second largest digital asset out there, alongside with all these great projects projects that everyone else has been talking about, and some of the momentum in the DeFi space and on the Ethereum network. I think it's a really exciting time for 2021. So I can't necessarily say what product will next, but the only thing I can predict with any certainty is the team will be very busy with Bitcoin futures and Ether. So that'll keep us busy for the foreseeable future, but we'll continue to listen to customers and the marketplace for what's next. And because that's a strategy that's served us really well. They've been a great source of inspiration on the product development front.
Okay, awesome. All right, Christophe.
Yes, well, looking back at 2020, I think something that was really rewarding, especially for the people who have been in crypto for a few years, working on projects, going through crypto winter, waiting for that institutional adoption. It was great to see that actually happen, before our eyes last year. I think a lot of us were surprised, at the speed of that adoption in the institutional space, but it was great to see it sort of take shape more prominently. And then things that I'm excited for next year or this year. Well, my background is in derivatives. We've just launched our options platform, so I'm really excited to see the volumes grow in the derivative space across crypto, but also I'd say the sophistication of the strategies that institutions are using, be it for hedging or directional or vol trading purposes. So yeah, I'm really excited about that.
Okay. Very cool. All right. Well, I think with that, we can wrap up. Thanks everyone for joining us today. I think we'll have to come back in a year and see how these predictions materialized. It's been a real pleasure. Yeah, thanks everybody in the audience.